The Saudi authorities issued a warning to the G7 regarding Russia's seizures, emphasizing the potential consequences by threatening to sell off their debt holdings. Greetings everyone. In today's video, we will be delving into a subject concerning Saudi Arabia's recent communication with G7 nations. Earlier this year, the kingdom privately conveyed a message to the group, expressing their potential intention to divest from European debt holdings if the G7 were to seize Russia's frozen assets. This proposal, aimed at supporting Ukraine, was met with mixed interpretations, with some perceiving it as an implied threat. However, following the G7's decision not to seize the assets, Saudi Arabia's position underwent a transformation. We will explore the kingdom's increasing global influence and its diplomatic endeavors in the Ukraine-Russia conflict. Without any further delay, let us begin our discussion. According to individuals familiar with the situation, Saudi Arabia discreetly suggested earlier this year that it might consider selling certain European debt holdings in the event that the Group of Seven were to take possession of approximately $300 billion worth of Russia's frozen assets. During discussions with certain G7 members, the Finance Ministry of the Kingdom expressed its strong objection to the proposal, which was intended to provide assistance to Ukraine. According to one individual, this objection was perceived as a subtle form of intimidation. Specifically, the Saudis made reference to the debt issued by the French Treasury, as reported by two sources. During the months of May and June, the G7 engaged in discussions to determine the best course of action regarding the frozen funds of the Russian central bank, the majority of which are held in European institutions. Eventually, the group reached a consensus to utilize the profits generated by these funds while refraining from touching the assets themselves. Despite pressure from the United States and the United Kingdom to explore more aggressive measures such as direct seizure, certain Euro member countries expressed reservations, fearing potential destabilization of the currency. According to anonymous sources, the reluctance of those countries can be attributed to the influence of Saudi Arabia's stance. These individuals preferred to remain unidentified in order to protect the confidentiality of their conversations. The Saudi Finance Ministry has released a statement denying any allegations of making threats. They emphasize that their relationship with the G7 and other countries is based on mutual respect, and they are committed to engaging in discussions that support global growth and strengthen the resilience of the international financial system. Although the kingdom possesses a substantial sum of euro and French bonds, estimated to be in the tens of billions of euros, the impact of selling them off may not be significant. Nonetheless, European officials expressed worry that other nations could potentially emulate Saudi Arabia's actions. According to a Saudi official, while making threats is not typically the government's approach, it is possible that they communicated to G7 members the potential consequences of any seizures. According to one individual, the stance of Saudi Arabia shifted following the endorsement of a proposal by G7 nations that did not involve the expropriation of assets. The motives behind Saudi Arabia's actions were not clear, according to individuals familiar with the situation. It remained uncertain whether Saudi Arabia's decision was driven by self-interest, as they may have been concerned that allowing a seizure could establish a precedent that could be utilized against other nations in the future, or if it was an act of solidarity with Russia. Riyadh and Moscow have maintained a strong relationship ever since Russia's invasion of Ukraine, and together they lead the OPEC Plus cartel, which consists of oil-producing countries. Furthermore, the Saudi government has established connections with Ukraine, as evidenced by President Volodymyr Zelensky's recent visit to the kingdom where he met with Crown Prince Mohammed bin Salman. The recent actions taken by Saudi Arabia highlight its increasing influence on the global stage, while also shedding light on the challenges faced by the G7 in gaining support from countries in the global south for Ukraine amidst Russia's aggressive behavior. Riyadh, under the leadership of Prince Mohammed, has emerged as a significant diplomatic force and expressed its intention to play a mediating role between Kiev and Moscow. Requests for comment made to the French government did not receive an immediate response. During a summit held in Italy in June, The leaders of the G7 nations reached a consensus on a financial framework aimed at granting Ukraine approximately $50 billion in new assistance. This aid will be provided through loans from the 7 member nations and the European Union, with the intention of repayment utilizing the profits generated by Russia's frozen funds, amounting to approximately €260 billion, $280 billion. Annually, it is anticipated that the funds will generate a substantial amount ranging from €3 billion to €5 billion. The mechanics of the scheme are currently being finalized by the G7 and EU. There are hopes among certain EU nations that this plan will serve as a stepping stone towards maximizing the utilization of assets. As the war persists and Ukraine's reconstruction expenses accumulate, it is highly probable that the demand for such measures will intensify. With its vast reserves of crude oil, Saudi Arabia holds the title of the largest global exporter in this industry. Additionally, the central bank boasts an impressive $445 billion in net foreign reserves, while the sovereign wealth fund possesses nearly $1 trillion worth of assets. The foreign assets held by both the central bank, referred to as Sama, and the wealth fund are not categorized by currency or country. However, the majority of these assets are denominated in dollars. As per the most recent information from the US government, Saudi Arabia possesses $135 billion worth of US treasuries. Questioning the legitimacy of Saudi Arabia's warning, 2 individuals pointed out the lack of significant shifts away from G7 currencies when Russian assets were initially frozen after the complete invasion of Ukraine in February 2022. Additionally, G7 members acknowledged the limited viable alternatives for the Gulf country to explore outside of the dollar and euro. To maintain its position as the primary global reserve currency, Saudi Arabia continues to trade its oil in dollars. Although there has been speculation about a potential shift to alternative currencies like China's yuan, Saudi officials have consistently downplayed this notion, asserting that adhering to the dollar is the most advantageous choice for the kingdom's economy. To support our channel's growth and ensure broader awareness, kindly hit the like, share and subscribe buttons. This will help us reach more individuals and disseminate valuable information. Thank you in advance.